fair value gaps and how to trade fair value gaps. In this video, we're going to be going over fair value gaps, understanding fair value gaps, and when should you use it, when should you not, and what is primarily used for. A fair value gap is a PD array that leaves a lots of rich orders behind. So market retraces it and eventually builds the orders, then goes back down or up wherever, right? The fair value gap, if it's a bullish fair value gap or bearish fair value gap. Fair value gaps, a quick little thought to you guys, are they only work during the kill zones, meaning they work primarily during London session and New York session, right? They do not work very well outside the kill zone, so do not trade it outside the kill zone. That's just for the, for the day traders, right? For the day traders, intraday traders, right? Just fair value gap, and just get trade into it. A fair value gap is created by 3 candles. Candle number 1 is, whatever, right? Candle number 2 is the important one, right? And candle number 3 is all the way down here. So from candle number 1 to candle number 3, so 1 and 3, right? They cannot have a wick that's like this, right? They cannot have a wick like this. They must leave a gap. When he leaves a gap, right? When you leave a gap like this, that means just leftover orders over here, right? So market needs to retrace, fill it, go right back lower, right? That is a fair value gap. And if the fair value gap has a wick that goes like this, that is no longer a fair value gap. That is nothing, right? There's nothing right over there. A fair value gap must have a gap inside of it where the first candle and third candle does not overlap with the second candle, right? So you can see we need a gap right over here, and it doesn't matter how this candle closes, right? When this candle goes like this, doesn't matter. It is the first and second candle. It's just the first and the third candle that cannot have a wick that's like this, right? If they have a wick that's like that, that is no longer a fair value gap. Some people can even call it as a void, right? But you're trading forex, you're not gonna have that, right? I don't know I think it's gonna have that in other pairs. You can have that in a Nasdaq, ES. But if you're on that, if you trade the right broker, a broker that's right, like forex.com, will not have any gaps missing there, right? So yeah, that's some bullshit theory some people made, but hey, it is what it is, right? So right over here, we have a fair value gap. This is the first candle, second candle, third candle, right? It doesn't matter how the second candle closes. It's the first and the third candle that matters, right? First candle created the candle right over there. First candle didn't do, see, you can see right over here, the first candle and the third candle never had an overlapping wick, and the second candle had a gap inside of it. So this fair value gap right over here worked out in your favor. There's 2 reasons why it worked out in your favor. First, it happened in a kill zone, which is between London session and New York session, as well as the wicks never overlapped. The first candle, the third candle never overlapped. Now let me show you guys another example here. I'll show you guys as well as a IFVG, which is a fair value gap that just got inversed. So they have orders right over here. They have orders right to the upside. Right, they have orders to the upside, but they don't know the order flow. So when the market does, right over here, has a rich left orders, but the market, they're wrong about where the market's gonna head. So there's so much orders here, market will want to continue to do, go back lower, fill the orders, but just stop them out and use that leftover orders, which is over here, these orders, right, to push the price to the downside. So this gap right over here will be used to get refilled and go lower. So the orders that were here that were left over, and they got retraced too, and we got filled, but they were wrong about the market direction. So you got inversed, you got closure below the first candle, the second, third candle wick, right? Disrespecting it, it closed the gap, right? So once it closed the gap, this fair value gap, it's no longer a fair value gap, but now it's an IFVG. So now there's new orders that's over here. There was new orders that was over here that pushed that wanted to go lower, right? So market goes back up, builds these new orders. When there's these other trades got stopped out, there's new traders that has leftover orders over here because it respects the gap here, right? So once it gets filled, then market goes lower, right? What did the market do? What did the market had an IFVG here? Simply because those leftover orders were in the wrong side of the market, not the right side of the market, by the way, right? They're in the wrong side of the market because the market was going to go to the downside, so market reversed. And that right there is the IFVG, which is the same thing, but just inversed, because everything could be inversed here, right? So you can see a fair value gap got created, inversed, got closure below the first candle's wick, disrespecting it. Now this is the IFVG. You got retested. From that retest, it went down lower to the overall drawn liquidity was supposed to go, which is the opening gap right over here. Now let me just show you guys more examples. Another example will be right over here. First candle, second candle, third candle. The first and third candle never overlap the wick, so this fair value gap is valid. See, tap the fair value gap and it caused a push to the upside, redrawn liquidity, which is right over here. As you could see, this fair value gap was the fair value gap that you were going to trade. Why? There's two reasons I said. This fair value gap worked because it got tapped during the right time. There's an SMT right over here, by the way. There's SMT with some sort of this fair value gap. SMT failed because he didn't have the right time. So this fair value gap, the only reason why it's working, quick little sauce, is because they must happen at the right time. They must happen during London session or New York session. They must get tested at New York session or London session, as well as daily ranges and CRT, right? In this case, there was a daily range. This fair value gap was in a discount. The discount got tapped, it went daily range high, and eventually the journal got met. Now, let me go show you guys more examples. This is another fair value gap right over here that got tested and got respected. This fair value gap, you can see why this fair value gap worked out, because it happened at the right time. Happened at 1 a.m. Tested it, went up higher. First candle, second candle, third candle. The first and third candle never overlapped. Now let me show you guys another IFVG one here. IFVG fair value gap. Do we have any here? Right over here, right? First candle, second candle, third candle. The first and third candle never overlapped, so making a fair value gap. Since they were wrong about the market direction, market reversed, stopping that out. So now there's new orders over here that are left out. Now these new bearish orders need to go get refilled. Cause see, wick does the damage, body tells the story. Doesn't matter how far the wick goes, as long as the body closes below this fair value IFVG, still relatively valid here. You got tested and went down lower, meaning drawn liquidity. Now let me show you guys one more example. The perfect example would be this right over here. There was leftover orders right over here. Since they were wrong about the market direction, they get stopped out, get a closure above the first candle wick. Then it gets retested to go up higher. Why does it get retested to go up higher? Because they are wrong about the market direction, and there's new leftover orders over here to the upside, right? So the orders get reversed. So there's so much sales orders right here. The people with a buy order, they buy so much that there's new buy orders that are left over there, right? So when the market goes here, there's people selling their orders away, and there's new people buying it up, pushing up high. You can see sold down here. Fair value gap worked again to the upside, and this is fair value gap in IFVG. We can have a whole topic on IFVG because I think there's a whole model out of this IFVG model. But yeah, thank you for watching. Make sure you guys like, comment, subscribe, share. Make sure you guys become a member. Make sure you guys join Discord. The link is down below. And make sure you guys like, comment, subscribe, share, and join Discord for free mentorship, free signals free, crypto signals free, free forex signals free, future signals free, gold signals free, magnetic pair signals, and we have the best community out there. I'll see you guys later. Peace out.